Okay, let's start the second session of the Family Foundation. Here as we discussed, we will go with the application document and how we go one by one. We're gonna dive into that. Here I have the presentation, almost 64 slides, but this is not the in the today topic. But here we will cover the agenda on the same fashion. Introduction of Family Foundation, we already know, but I'm gonna dive into detail on the practical aspect, how we gonna apply for the transparency. And this presentation also prepared from the most of the data from the FTA webinar. And I try to align the other things. Okay, the first is the beneficiary condition. So what is the beneficiary condition? That just now, even the question we already seen for the beneficiary condition. The the Family Foundation was established for the benefit of identified or identifiable natural person or for the benefit of the public benefit entities or both. So now here the main point of the Family Foundation is the natural person. So here we already understand the identified means the by name. We can give the any person name, or we can say the Miss Arina is the identified name, or we can say the Ghazanfar Hussain is the identified name, or any other name. But identifiable, we understand this is the like we say the grandson of the Mr. Ghazanfar Hussain, or the grandson of XYZ. So again, that is also identifiable. And here we learned, as per the FTA workshop, also they mentioned even the child is not born, but still we can mention in the grandson of Mr. X. Anyhow, so this part is up here. We already seen the beneficiary condition. Now I share the in the group also the beneficiary, the first two document. So I believe, hope most of the people they got the foundation register. So I'm gonna open the same sheet and share over here. Stop sharing. Okay. So this is the first one document where we are seeing the beneficiary register, and earlier we said the identified beneficiary. So mostly the common example, they must given the names. Mostly they given the names in the charter. In the Family Foundation, normally the DIFC, they have the charter. Are there another document maybe? So let's keep as example DIFC. The charter in which they given all the details. So whenever we ask for the Family Foundation, we have to ask for the charter also, in which all the details are provided. Again, in case of any modification, in case of any update, so for sure that also will be we can get from the taxable person or the client. So how it will be look like, we have, this is the one of the sample. You might add more, you might modify. So here the detail of the beneficiary people in the Family Foundation that described in the charter are later on modified. So we prepare here the detail, the full name, nationality, residency, signature as a part of, just you might add the signature, you might not add the signature, because as the trustee, they already is there, or the settler is already there who's signing or confirming. So this is the one of the sample. So if here any questions, so I would like to clarify that, or anybody would like to add over here, that also most welcome. This is one of the basic part. The foundation, yeah.
Can I ask a question? I think that what is important here, maybe I'm wrong, is to show also the tax residency. Of course, it can be different in different time being, but when you mention here residency, you mean just like a real place of residence, not a tax residency.
Yeah, it's just residency, the UE resident or other. Tax residency is did not cover up here.
Okay.
Okay. So the residency means some they have the nationality from the like the Europe, but they are living also here. But in most of the cases, what I seen, the people just park their investment here, as one of the participants also mentioned. Maybe that if they keep the investment in the other part of the world, it's subject to tax due to local regulation. So what they do, they park investment in the real estate, and even one of that UE market. They take the gain, and the second is they might have the saving if they keep the funds in the home country, whatever the local regulation. This is the information because if we are saying is the UE resident, okay, so then we have to give the MSID detail and all other supporting also. But mostly I seen they are even they registered the family foundation, they are not the UE resident. So anyhow, this is the one of the document I shared. Now we are going this step by step in the same sequence. Of course, you guys have the file, you can save in the same pattern. So now let's move to the next. Hope my screen is visible. Okay, the document that is the we prepared and given to the FTA. But this is the working paper that we get from the detail from the client, what is the relation, because as we are not aware, so we have to ask the detail in a detailed version, depends upon what are the complexity. So while we get this detail, then we can prepare the in a undertaking format that earlier we seen. So we can add the detail, we can remove the detail, we can modify as per the requirement. But this is the information as a basic that we looking from the client. So here the beneficiary ID, names, individual, company, residency, juridical person, relationship, okay, ownership, allocation. This is also important factor we will see later on, email, contact, TRN, depends upon the each factor. So this is the working paper that as a starting document of the family foundation, we require the detail. So again, here is the foundation name, start period, the statement date. Here is the allocation. Okay, the distributive share of the each from which source is coming. So maybe they having the dividend, they have the bond, they have security equities, apart from the real estate. Again, that also will be tested on the same condition, Article 17. If they are meeting, yes, they are also meeting the condition of the family foundation transparency. So we seen commonly the real estate and the investment are the mostly the investment in equities, bonds. This is also common investment. So we have to get all the detail, then the allocation detail. Allocation detail is important if they have the public benefit entity, because other way they're not yet distributed. So this is not the mandatory as an individual, but if the public benefit entity is a part of the family foundation, yes, we already seen the 6 month distributive condition is there. So we have to ask the at the beginning, give us the detail for the same. So here the withholding tax, any other kind of the activity where they are involved. Here the realization basis tracker, again, we already knows the realization basis. So what is the realization basis? What are the investment they made, and under what is the if they made the investment in the juridical person, and how they are gonna receive the funds. So based on the realization basis or non-realization basis. The same criteria also we kept the track. Here the participation exemption, as we discussed the participation exemption, again we have to ask them, please share the detail where you made the investment. So as earlier we discussed, if they are meeting the PI condition, okay, so of course it's again meeting the criteria, it's exempt income. Even as standalone, we might think, okay, this is not the this is a taxable, but when we see the participation exemption criteria, again is exempt income. So that's why this is also important over here. Now we are discussing the family foundation, but the other legislation or regulation also coming to the test. We discussed the natural person, maybe the I think the ministerial decision 49 for the natural person, if I'm not wrong. And then the real estate whole factor is coming, that participating exemption is going coming to test. So here the UE position. So we have to get this detail also, because mostly I have some complex case, but mostly the same one. If the family foundation is not multi-tier, so this document is comprehensive. It will cover. Share the document with the client, asked to fulfill all the details. So mostly maybe the 50% is applicable to the basic family foundation, because but depends upon the where they made the investment. So here I try to cover the all the area, and as per the applicable IFRS or the from the tax point of view, that we already seen the participation exemption. We know what is the participation exemption. So we can ask the client, the you made the investment, so these criteria is met over there or not met over there. So anyone would like to have any question over here? These two, the statement from here we will prepare, that letter I already shared, then working file already shared. Now let's move to the next part. Okay, now we seen the family foundation beneficiary condition. Now next is the principal activity condition. Now what is the principal activity condition? So we already learned through the quiz also, family foundation, the main objective is to receive, hold, invest, disperse, or otherwise manage asset or funds with this saving or investment. So now let's go to the next. Let me open this participation. Okay. I'm going to share in the same group. But here what we are discussing, you can save in the same format, even I given the reference also in the same sequence. Now we are already here in the stop sharing. Now, if we already get the detail from the client, what are the investment they made, activity they are doing. So based on that, we are preparing this document. So this is the sample. It can be modified, add, but as a understanding, if the basic one, just verify all the steps are there. So it's comprehensive. You can ask the client to sign and stamp and proceed further. And normally stamp is also not there, because in terms of family foundation, the criteria is a little different. Maybe the people have, maybe they don't have. So this is again, if okay, anybody, hope you receive the file, and just go through. And if you have any question, so let's discuss on that. Meanwhile, I'll take the other one. So now the second activity the second element we are discussing the activity. So under activity, we already seen what is the declaration, but this declaration subject to change based on the other information. So now one of the common is the property. So under property, what we need and what are the detail to be covered and how the document will be, I'm gonna share that also. I appreciate if mute the mic.
I think you can mute him because you're a host. Try, please.
Yeah, let me, because I'm already, okay. I'll do from here. I think it's already mute. Okay, so now what, okay, so now we're gonna see the next part is the, no, 1 minute. I appreciate if you can open the same time. Okay, now the next step for the property. So what are the property as a family foundation we hold? Let me- So now here we have to get the detail from the client. What are the property we have? And in the property, we have to give all the reference. Why? Because FTA, when we given the document without this information, FTA will raise the query. They will send back the application. They will ask this detail. So we have to prepare the in-house financial or the audited financial if available, preferable. If not, then you have to prepare in-house financial and given the all the detail of the property or asset. That is the most important. They will ask, even you given the audited, they will still ask, give us the list of the asset. How the list of asset? With the further detail. Like the property owned, where, okay, the project name, the tower name, the plot name is already written on the document. Title deed or a COOD reference, okay, that contain all the detail. Then licensing authority, then the purpose. So this also to be addressed. Passive investment offline and under development. So this is passive income. So these is defining part. We are complying with the family foundation.
Will you also share this document? Because you didn't share.
I sent this file. You not got it. I sent this one. Principal activity.
Okay.
Let me see. This property declaration is not there. I'm gonna share the property declaration.
Thank you.
And we are discussing on the same sequence how it will be work. Although at the first time when we even we knows everything, but how to framework, how to step by step go, it's challenging. But now the structure I'm trying to explain and share in the same fashion what is required, what is the applicable. Rest is only the execution. But still, if any member would like to ask the further information or clarification, I'm available, please. So again, here we have to give the confirmation also, but depends upon the property type, and this confirmation is important. What is the legal reason? No brokerage, no third party, so no short-term letting. So again, maybe depends upon the property. We may customize and add other regulation or other perspective. Maybe while executing, you have the another way of to prepare the document. Yes, you can go ahead, but here the framework, the base is with you, and we are getting this document signed from the Board of Trustees. So hope so far is understanding and the framework is coming in the same align how it required. Okay, now, okay, one more thing is I have to share properties there. Yeah, this is property declaration, but the again the one. So maybe they have only property or maybe they have bonds as well. So again, one template is there. The Word file normally we prepare, get sign and stamp, and the Excel file for the working paper, how we get the data from the client. So there is another one Excel file as a working paper. Let me check that. The Excel file, okay, let me. The purchase. I'm just family foundation. Smart property sketch. Okay, there is another Excel file that I'll share shortly. Now so far the main area is already covered. The beneficiary condition, principal activity, and what are the working paper is required. And in working paper which detailed to be fulfilled, that also already shared. Now the no business activity we already understand through the quiz. And so which are the activity that will break this condition? Let us again understand this.
So it's activity that
No
requires
business.
license.
Yes.
If
No business.
it would be, yes, if it would be held by individual.
Now again, the family foundation does not conduct any activity that would have constitute a business or business activity. Uh, uh, just now we understand if wherever is required the trade license, even they don't have but require the trade license as a natural person, if we go as a standalone, it's subject to tax. This is the brief understanding. So here we have only one undertaking that we're gonna share with the along with the application, because again FTA don't know we are doing or not doing. So as a self-assessment we have to share, okay, yes, we are not doing any activity. So okay, I'll gonna annual confirmation, business annual confirmation. So here we are discussing no business activity. So we prepare here the confirmation. We are doing all the activity that align with the applicable regulation. So if we have any other activity, we will mention, then our application will not subject to approval to the FTA. I'll share this one also, but I've just made some modification and now the WhatsApp, I think, not picking the file directly. So anyhow, so here as a part of the process, we understand no business activity deviation. So let's go back to the and understand. You see, I think I did not share the screen for that. Let me share again. Here, yeah. So no business activity, it will be some sort of confirmation, undertaking in that pattern. We are giving the undertaking, whatever the activity we are doing, this align with the uh, Article 17 of the city law. The second thing, we have the qualifying and public benefit entity are not only the qualifying public benefit entity or only the public benefit entity, that also we have to share the information, because we have to confirm if we are not part of the qualifying, then we don't have the condition also to be not met. Although this point will be clarified from the beneficiary, that is the first point. If is shown over there, then we have to give the undertaking. If not, then it's not required. But as a comprehensive document, this detail is already added, may be applicable, maybe not applicable. Any point over here would like further clarification? Let me annual confirmation. No business activity, no working. Yeah, the next is okay. Our next condition. Let's see what is your next condition. No tax avoidance. So no tax avoidance. So this is our the fourth condition. We have to see whether it's met or not met. This is one of the point earlier we discussed how we ensure or how we can counter this no tax avoidance. Yes, in the state, we are looking whatever the available information by taxable person provided to us. If we seen any tax avoidance, so we might highlight to client. Now, this is the because sometimes the information is not complete, we might not have the proper understanding. We ask the clarification if falling under the tax avoidance or no, subject to the further detail. Accordingly, we take the action. So here, if we are meeting the condition, just now I shared one template regarding the no tax avoidance. So let me go for the no tax avoidance. Here again, the working paper or the undertaking for assessment, we can get the detail from the client and see how we can satisfy this condition. The purpose is already mentioned. How again the question will remain subjective whether is no tax avoidance is 100%. Again, we have to work on the database that we are getting. Here, the further detail, the transparency background. I added the possible detail. Key statement to apply. Here we have, as per our best knowledge, we are confirming to the FTA. Then practical interpretation. This document, hope you already got. Again, this is not the rule of thumb. As per the requirement, you can plus and minus take as a sample or understanding. These are not the final document, but you can use as per your requirement, modify or whatever the further detail. But on the broader, on the higher side, yes, it covers the all the element that required to apply for the transparency. Again, the purpose, objective, substance of activity, asset funding, business operating business risk. So this is the working paper. Normally we called what we prepared. Once we satisfied, then we can give to the FTA further confirmation based on that. Again, here the no tax avoidance is a very broader area. We have to see for that business or the family foundation what are the associate area that may relevant, may not relevant. Here some illustration for understanding is also there. Then the evidence pack, because even we are working as a tax agent, we have to ensure, we have to secure or manage our risk factor also. Because today we might process their application and they even approved, but later on found the documents are not appropriate. So they FTA come back as a tax agent to us also, and they taxable person to them also. So even the taxable person is liable, whatever the fines and penalty, but as a tax agent, we are working if a tax agent on that client. So yes, FTA may raise concern to us also. During the last FTA tax forum meeting, they highlighted the tax agent also up to certain extent may be liable for that. If his client is getting the fines and penalty and he's onboarded, he's as a tax agent with that client, so they might raise some clarification to the tax agent also. Anyhow, I believe in detail, if we're gonna touch one by one, it will be, the comprehensive. But overall understanding we already discussed in this regard, and it's not applicable to all client all the details. Okay, so now let's see the next part. Now the last but not the least, the distributive condition. In terms of distributive condition, this is we already discussed if the public benefit entity part of the family foundation. Then we have to accordingly see what are the additional requirement is there. If it is a qualifying public benefit entity, if the qualifying public benefit entity, then it's already exempt income, so we don't have to see the 6-month condition. But if it's not the qualifying benefit entity, then we have to go for the second, that is the 6-month distributive condition. If that we met, again, we remain meeting the criteria. So this is also one of the, we mentioned in one of the document, this condition we are meeting, not meeting, but this will be started from the beneficiary condition where we already given the list of beneficiary and the charter of the family foundation. 1 minute, if I can see if some document is. Again, it is on the same pattern. Okay, I'll share this document as well. Distributive condition. Okay, now my screen is visible. So regarding the public benefit entity, again, we have the one undertaking or working paper where we have to describe what is the detail. I believe you receive all the documents.
Yes, yes, we do
Thanks.
have everything.
Okay. Again, this is the one of the draft. It might work as it is, or might you have to modify, depends upon the requirement. Here we have to fulfill all the information, then background, and again the qualifying and public benefit entity, both element are added over here for the then here the important part, if it's exempt income, when it will be exempt income, if the qualifying public benefit entity is there. But if it's not qualifying public benefit entity, then it would not be exempt. Then the taxable income condition, we have to see what are the other condition. So again, undertaking and commitment. So see, FTA is not fully aware what are the transaction or the nature or the things we have. As along with the application, what are the possible information are required as that is required, possible information and the clarification that required as per law. If we are covering in the our documentation that we are providing to the FTA in the form of the undertaking or the clarification or the supporting, so that more higher our chances of the approval. Otherwise, FTA will keep rejecting that, sending back the application, or sometimes it may happen if you given the information that is not appropriate. So if it's not appropriate, even if you give the full information, it might be application is approved, but FTA reject the application. So FTA is looking our document, our supporting, based on that he's considering for the approval of the transparency. And so far, all the possible information and the document as a complete set we've seen here, and I shared with you also the template document. So if any other questions, so I'm open for that. Because if we go one by one, because it's not applicable to everyone. Maybe the 30% from this document is applicable on any family foundation. So here is the condition to be met for the family foundation. Now we can see the beneficiary. We already seen what are the information is required and what is the definition of beneficiary. Principal activity again individually is explained. So you will get this presentation as well. Now I'm just gonna see the quickly no business activity. See, this is one of the FTA webinar taken from the same, but we already discussed this part, but let's, if somebody still not understand, so we are trying to explain over here, no business activity. So what is the example over here? We are assuming that the family foundation is here, owned by 100%, owned by 100%. Okay. So two natural person. Okay, here another. It's not important. These two person would be relative. Any natural person, any set of natural person, set of NP, natural person, they come up together and they make the family foundation. So Mr. B and C, they come together and they form the family foundation. But now here the important owned by 100% and 100% by natural person. This is the another point why I'm highlighting. We will see. Okay, the family foundation. So he's doing the two activity, managing real estate. One is the residential, another is a hotel. I already cover in one of the quiz this point. So now if they operate the residential, the family foundation own the residential properties, can this residential property, Mr. B, if owned directly, so it's subject to corporate tax or no? As a natural person, if he's involved in the real estate without license, so it's not subject to tax. If he have the here we have to see the possibility if natural person run this activity as a independent without trade license is not subject to tax. Okay, if this is good, but how about this hotel? How about this hotel?
What is commercial property?
So hotel is another commercial activity that require the trade license. Even if we don't have the trade license, but it's required. So if standalone Mr. A and B or anybody is doing here, so it's not meeting the condition of the exemption. So then this is the one of the said if this hotel is there, then the breach of condition will be there. No business activity. This is the business activity. So now we understand what is the no business activity condition. So this is the test for the business activity. Hotel is a business activity, then it's a breach. So we even we submit to FTA, they will reject. Now here the distributive condition we already seen in the quiz also. And here, because today we are not coming, our agenda was not to theoretically cover this presentation, but still it's relevant. So here the distributive condition, what are the condition? One or more beneficiary of the foundation, similar entity meet any of the following condition. So we have to test such beneficiaries are not driving income through family foundation, but let me go to the example. I think the point will be covered over there. This is the family members. Let's say Mr. A plus Mr. B plus C. Another is a charitable entity. So now charitable entity and the family members, they made the family foundation. So this charitable organization, so what we call this charitable organization? Public benefit entity. So now if this public benefit entity, so now we have to test another condition. Okay, find this public benefit entity. So let's see another two sublet. What is that? This is the qualifying public benefit entity or non-qualifying public benefit entity. Because if we understand this public qualifying benefit entity, the concept or the regulation or the corporate tax law, then we have to go into the further detail. If the qualifying, of course, this is the qualifying is the exempt, as, but if not qualifying, then it's not exempt. It's subject to city. If it's subject to corporate tax, but FTA still said, okay, fine, even it's not exempt. So then check the 6 months distributive condition. Then check the 6-month distributive condition. If we go in this direction, it's good. But if let's say it's not going this direction, it's not qualifying, then this is the option non-qualifying, and non-qualifying is not exempt. Okay, if not exempt, then what is the next condition? We have to satisfy the 6 month. So this 6 month, if this is also not meeting, then our application will be rejected. We are not meeting the condition of the family foundation. Again, there is a multi-tier structure. We seen the example, but here the multi-tier structure, I just quickly cover on that because our time is up to 5 o'clock. Of course, I'll take your feedback also if required. So we'll cover up in the theoretical aspect as well. Multiple structure here, the family A, B, C. They come up and they make the family foundation. Maybe is in TIFC, maybe REC, ICC, or maybe ADGM. Mostly these free zone, they are dealing with the family foundation. And commonly we are seen in the market also. So now family foundation is owned by, this is the 100%, and this owned 100% by B, and this owned by 100% C. So this is called the multi-tier structure. So now here again, this structure, again, this is one of the simple condition. So the concept is that if family foundation applied, this family foundation applied to the FTA, for transparency, if it is approved by giving all the documents, all the supporting is approved, then the family foundation owned 100% B. What is the B? Now this is the another part. This is the juridical person. What is the juridical person? Juridical person is LLC. LLC company, like in mainland or like any other company. So let's say, what is their activity? I'm giving you example. The activity they are doing, commonly seen in the market, investment in commercial enterprises. Investment in commercial enterprises. So this is the activity. And this term and this activity is very broader. Maybe they are doing many things. But we have to, again, see this activity as the outcome of this activity, what they are doing. So uh, let's say they are invest in the properties. Okay. Now here the another important factor that is already whether this ADGMA, let's say this ADGMA, sorry, DIFC, this DIFC make any objection to investment in the offline property. Okay. So this also confirmation we have to give. There is no objection. Or what the tax authority is saying is allowed to invest over there. Or this the condition, the criteria of the DFC, the family foundation, you're doing the investment in XYZ. Either DFC is allowing to do that activity. So now, uh, if you own the property in the Dubai, that's fine. In the DXB, okay, yes, you can own the property. But how about if you own the property in the Sharjah, in the Ajman, and in the Ras Al Khaimah? So now again we have to see whether they allow to own the property. So now the other Emirates, this DAFC and the other Emirates, do they have the collaboration? Or they have some NOCs? Are they? So this is another check. Okay, this is another compliance. So now we have to satisfy the DAFC. But as a Dubai and the Ras Al Khaimah, they already have one agreement. Based on that, they can own the property in the Ras Al Khaimah, and the Ras Al Khaimah companies can own the property in DFC. So this is one of that. The other Emirates, they're like in Dubai, there is a RERA, and the other Emirates, their own land department. So we have to see they are allowing this or not. If that also not satisfying, then maybe the own condition of the DFC where the family foundation are there. If they are not allowing, then again we might come under breach of the condition. This is one of the technical point I highlighted because while working practically, I've evidence that the Dubai and the Ras Al Khaimah, they have an agreement. Based on that, the companies can own the property in each other Emirates. They can own. Why? Because at the end, property gonna register with the land department in Dubai. This is a RERA. Other Emirates called the land department. Anyhow, so here we are seeing this example. Let's come back. They have the LLC company. Subsidiary B is the LLC company, and let's say the DSO. Let's say in the mainland of Dubai, the activity is the investment in commercial enterprises. Now, the investment in commercial enterprises, they invest in the residential properties as the offline, maybe other also. Then what they did, they invest in the bonds. Then what is it? The equities, any other? So now we have to see either these activity or these investment is meeting the condition of Article 17. Property, yes, is meeting. Bonds meeting. Equities meeting, because all this activity natural person can do, and he do not require the trade license. So same way, if uh, this is approved, so this LLC company, when I discuss in the the group of the tax agent, they said, okay, how come the juridical person will be applicable to transparency? This is the commonly we knows because this is a family foundation. We stopped over here. We didn't think or the thought about the next one. This company owned by the family foundation and even a juridical person, yes, it may fall under the physical transparent, and the income will be exempt because all this income, when this income, this itself is exempt, even if we share this income to the beneficiaries, it's not subject to tax because here we are saying the income getting from the family foundation in the hand of the beneficiary, it will be taxable. But whether this income, this income coming from the revenue stream is a taxable? No, it's exempt income. That's why the whole family foundation concept or the mechanism is working. Okay, now we seen this is also accepted. So we apply to the FTA for this company also. By preparing the application, by attaching the this standalone, it will not work. Standalone, it will not work. It will work only when as a header or as a upper side family foundation is there. I was discussing one of in the tax agent group. They are saying, okay, now I have the one client who's are the doing in the same activity. I said, okay. He said, now we can proceed with the transparency. I said, where is this? This part is not there. What is the main point? The multi-tier. Sometimes we take one aspect and we ignore the other part. What is that? Multi-tier structure. We are coming from the family foundation. If the exempt person owned by another taxable person and that also meeting the condition of the Article 17, then we are eligible. Not by default, we are eligible. We can apply to FTA, submit all the documentation. It FTA may approve, it satisfy the condition. If this is done, then we come up here. We can do the same process over here. Okay, let's take another example. If this is rejected and this is meeting all the condition, it will work.
No.
The chain will broken over here. It stopped over here. This part even is met everything, but this is not met. Hope the multi-tier structure is understandable now. If any other question, please let me know. There's another important concept. This we already discussed. Good, good, good. Anyhow, another point. Yes. Now here, this is the another point I would like to, we have 15 minutes. I believe we can cover this part. Okay. Now again, the multi-tier structure entity not wholly owned. This is the problem. Entity not wholly owned. Where the chain? What was the chain? A is coming in the same chain. But now this is coming in the same chain, in the same tier. This is the individual person. Okay. He have the family foundation 1 and family foundation 2. Even assume this is the same person, same NP. This natural person, he have 100% over here. He have 100% here. So now this family foundation 2 is meeting the condition or no? So this one Is meeting the condition or no? Is 100% owned and assume all other conditions are met? Yes, it's meeting. Family foundation number one is meeting the condition. Yes, assuming that all other condition 100% owned is met. But now let's say this is 50% owned here and the 50% owned here. So the point was wholly owned. Now this is not the wholly owned SPV. What they did, two family foundation, they made investment in another property, but by making another SPV. Okay, but this condition is not meeting, not wholly owned by 100%. Now this is not eligible. Even you submit, they will say this is a breach of the condition. This is another important part, although in quiz we discussed, but here I believe maybe understanding is refined. Let me go. This is the, again, it will not be covered in 10-15 minutes. Anyhow, let's stop over here. And if any question up to here, because now the basic level or the mid-level family foundation, we already understand. Exception is coming where? That is the multi-tier structure. Okay, that also we covered. That also we covered and we learned. Only now the more complex structure, now how it will work, that part is remaining. We'll try to come up with that second part later on. Up to here, any question, any comment, or anything we might discuss, and any participant would like to add the value, that also most welcome.